David, thank you so much for joining us today.
Thanks for having me on again. I don't know if I would say I'm special. That might be an insult.
No, definitely. And one of the things we were going to discuss today was about the markets. And one thing you just wrote recently in your mining stocks journal was that you see that we might be hitting a final bottom in the precious metals. You're saying that this might be the final bottoming process for gold and silver, and you were especially interested in the silver chart. Can you expand on that?
Sure. And again, I think the key modifier there is the word might, because obviously with the amount of intervention that goes on in this market, it's impossible to predict short-term moves or intermediate-term moves. I mean, you can predict that as soon as the employment number headline hits the tape, they're going to smash gold and silver. I mean, you can set your watch by that. And of course, today they smashed gold and silver as soon as the headline hit, but then they bounce back. And that in and of itself right there, that type of bounce back is the type of bounce back we're seeing when they're hitting the market, for manipulative purposes. Rather than staying down, it seems to be bouncing back. But I actually, the title subject of my mining stock journal last night, besides of course good junior mining stock ideas, was that I think that we may actually be in the final bottoming process. And if you recall, I don't know, last several weeks there were a lot of people who got very bullish on the market or on silver because of the commitment of traders, the way the traders were positioned. The banks were net long and the hedge funds were net short. And my stance on that was, hey, look, let's hold down the enthusiasm because the gold commitment of traders report is still quite bearish. And last Friday, in the COT report showed that the banks actually put on quite a bit of longs in their gold position, and they covered their shorts. So in other words, they reduced their net short position by quite a bit. And at the same time, the hedge funds were unloading longs and piling into shorts. Now in past cycles, when they've reduced their net long position, they've started off just selling longs and letting the banks cover. And then eventually, as the cycle's bottoming, they start to short pretty heavily. And there's been a couple times when the hedge funds were actually net short gold. Well, last week, they sold off a huge chunk of their gold long position in COMEX futures, and they added a huge chunk of shorts. Now, the way the market was trading earlier this week on Monday and Tuesday, it felt like it was a continuation of that pattern where the hedge funds were chasing momentum lower by selling longs and shorting, and the banks may well have been covering and adding to their long position. We'll know more this afternoon when the COT report is out. But that's part of my theory there, is that to the extent that the banks are reducing their overall net short position in gold and the hedge funds are reducing their net long position, it'll bring both the silver and gold commitment of trader report into agreement that, yeah, the market's set up to move higher, because that's usually what happens. Banks go neutral to small net short, and small net long, and hedge funds go neutral to small net short, and that's usually when we get a big market rally. Well, I was looking at, it was actually a subscriber who pointed it out to me. He had mentioned that silver, he put on a long position in USLV, and he said silver has bounced 5 times over the last year at 1620. And I looked at a chart, and I actually looked at the USLV chart because that kind of magnifies the movements in silver since it's 3 times SLV. And I was like, holy crap, not only is USLV, not only is it bouncing at essentially $9, but it's kind of this past week was the third bounce where it was a slightly higher level where it bounced. And earlier this week on Monday and Tuesday, you had what looked to be capitulative sell volume in USLV. So, again, anything can happen here with the manipulation, but certainly, right now the technicals, at least for silver, are for sure set up for a big move higher, and gold seems to be moving in that direction. And then just one more little anecdote that kind of reinforces this idea is that the mining stocks have been very resilient, even when they were slamming the metals earlier this week. The broad mining stock indices weren't really down that much, or they might have sold off at the open and then they bounced back. I mean, today's a good example where the mining stocks opened up on the red side when the market opened, and I mean now the Huey's green. So, and if you look at like a chart of GDX, you can actually see that it reflects the same thing I'm seeing in USLV, in that you've got some definitive bottoms that have been tested, and then GDX moved off that bottom, and it seems to be really kind of moving into a nice uptrend right now. So, again, for me, just with what I've looked at historically over the past 17 years of doing this sector, to me, all the ingredients seem to be in place for a big move.
It seems like we kind of have short-term memories in markets, at least people who are in the precious metals. Like if you look back, for instance, beginning of 2016, we had hit what looks like the nominal bottom, 14 roughly, and it shot up over 20 to 21 in about 6 months' time, in the middle of 2016. And from there, we've kind of worked downward and sideways, kind of coiling, like you're saying, keep bouncing around this 16, popping back up, hitting resistance, bouncing. And it looks like it's tightening technically, just looking at the chart. So I totally agree with what you're saying in terms of, technically looking like it's poised for a break one way or another. And hopefully to the upside for anyone who's bullish on the precious metals.
Yeah, that's a good point, because I actually had pointed that out to my subscribers in the USLV chart, where it looks like it's kind of coiling, and those where it's just the moves, as it moves laterally, become more and more compact, and there's less volatility. And I did put the caveat in there that a formation like that can break either way.
Right.
But again, when I look at it in the context of all the surrounding variables that I look at, I think there's a good chance it'll break higher.
One other question just to throw out there. I know that the DXY is basically the US dollar measured against other large traded global fiat currencies. So it's kind of measuring one fiat currency versus another. So it's a misnomer. But you always hear people running around talking about, the dollar's rebounding here, and I think it's at 92.56 today. It looks like it may have a short-term rebound. What is your feeling on that, and the fact that there are a lot of emerging market debt that's that needs dollars? Is there a chance for a rebound in the U.S. dollar, say for the next few months ahead, maybe through the summer?
That's a really good question. I'm glad you brought that up, because I'm getting tired of all this megaphone blasting about how strong the dollar is and how it's poised to move higher. I mean, if you look at it in the context of the last 4 years, there was a huge move in the dollar starting in the middle of 2014, where the index ran from 80, all the way up to 104-ish over the next, 2.5 years. Well, that's a big move, and it actually went from 80 to 100, so it moved 25% in the space of less than a year. That's a big move in the dollar. If you look at the same chart, I mean, the move that we've made off of 90, and you could just say that's predictable, because 90 has been kind of a support level, or the 88 to 90 band has been a support area. I mean, it's the move that it's made since, I don't know, however long it's been, the last 4 to 6 weeks. is about the same move as it made in, call it the fall of 2017. Mm-hmm. And I don't remember everyone screaming about, hey, the dollar's, going to move a lot higher here, because it actually rolled over and went down to 90. Mm-hmm. So to me, the jury's out in terms of just how much the dollar is going to move. And let's not forget that a big move in the dollar in 2008 is what preceded, the culmination of the great financial crisis. So, is a big move in the dollar, is that going to be bearish for gold? I mean, it might be initially, but I think at this time, I think the market's so washed out, and I think investors understand that, if we get a big spike in the dollar here, it's because we're on the cusp of a massive financial problem, and the only reason the dollar is moving higher is people are clawing for dollars, as you say, to service dollar-denominated debt. Mm-hmm. So if anything, we'll get some volatility in the market with, in gold and silver. But I think if the dollar starts to move higher like it did in 2008, I mean, it's great news for gold and silver, because it means we're about ready to have financial collapse again.
No, it seems like some very wealthy people are seeing how you are seeing with respect to precious metals, that they think precious metals are going to increase in value over the next, in the future. Now, you were reporting on that an Egyptian billionaire put half of his net worth into gold.
Yes, that was actually a story that I had picked up on Bloomberg News. This guy's worth, I don't know, 4.2 billion. He's some sort of Egyptian, like, building and construction industrial magnate. And he said that he put half of his net worth in gold. And I have to assume, I mean, I'm sure he's got some paper gold products in there, but I have to assume a lot of it probably went into physical gold.
Yeah, I think I looked at the piece. It looked like in the interview he talked about having to talk his mother into it, which I think a lot of people out there could kind of having to talk to maybe their spouse or talk them into it. And then the piece also mentioned that he was doing some mining plays. He's involved in some mining programs here or there, but it didn't get real specific, like you said, whether or not what percentage, because he had 5.7, I think is the number, 5.7 billion, I think is the number stated. So say half of it, right? So you're talking about 2.8, 2.9 billion. You're not going to stick all that into mining shares. I presume, like you said, he's gone into some type of gold foundational play, whether that's physical bullion or some type of derivative like GLD or IAU. But, the jury's out, because Bloomberg does lazy journalism and doesn't ask point questions about gold. So we'll never know, I suppose.
Well, probably intentionally lazy journalism, but I like the way you put that.
Right. It's just one thing. I just hate the way that they say gold, and it's just a catch-all for every goddamn derivative out there of gold. It just doesn't make any sense to me. It's like there's a difference,
Yes. Yep, I completely agree. His mining stock exposure is actually, I'm assuming they're pretty large holdings in Evolution Mining, Endeavor Mining, and La Mancha Resources. Mm-hmm. So, he's got, he doesn't have a few hundred shares of GDX and GDXJ and a couple juniors. These are like large scale, large mining companies.
Yeah.
Sometimes Endeavor Mining gets confused with a company called Endeavor Silver, which is a silver company with mines in Mexico that I really love, and that my subscribers have done well with since I recommended it about a year ago.
Yeah, Endeavor Resources, I think what they maybe were called, but they had a lot of great videos on silver mining on YouTube. You can find them for free, but I definitely agree. That's always been a really great resource for understanding how difficult silver mining is.
Yes.
All right. Now, before we let you go, David, I wanted to touch on the Fed this week because we saw the Fed not raise interest rates, although they might be raising them soon. What is your perspective on this? I know we were talking before the interview, and you were saying that it really just shows how weak the economy is.
Yes. I mean, well, let's face it, what they're calling an interest rate raise, I mean, it's taken they've been at it for 3 years or something, and they've raised rates about 150 basis points, 1% or 1.25% in total over that time. I mean, it's hard to classify that as interest rate hikes. So I call them, when they do take the Fed funds up, 25 basis points, 0.25%, and I call it a little nudge, and it's kind of a sheepish nudge. And I think part of the reason why they're doing it is, in fact, as a sort of low-grade defense of the U.S. dollar. Because, if rates here were still zero, I'm sure the dollar would be a lot lower. So, and again, I think the reason why they didn't raise on Wednesday, and the reason why they haven't really, again, it's not what I would characterize as raising rates, is that I think that the economy is a lot weaker than what the propagandists, the media, the politicians, and Wall Street want us to believe. And I have a lot of evidence for that. And I think, despite what the Fed says in public, I think they know that. I mean, they have better data to look at than we do. And so if the economy was really as strong as they said it is, and there's a shortage of labor and the labor market's tight, blah, 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 they'd be hiking interest rates in 50 to 100 basis point chunks, not, quarter of a percentage point, once or twice a year, and we're good. So I think Wednesday's action, again, reflects the fact that, the Fed knows the economy is weaker than they're saying it is, and they know if they raise rates too much, it's going to throw the economy into a very bad financial crisis.
Hey, David, real quick, I just want to throw it in there because I didn't get to read your whole piece, but I know you follow them well, and I'm guessing you're probably on the short side of either. But Tesla and Amazon, I know Tesla had some crazy stuff happen this week on a conference call where Elon Musk snubbed somebody who asked a pointed question. So I'd be remiss for not asking what your takes on those two companies at the moment are.
Not a problem. I mean, to me, they're the two of the greatest frauds in the history of the financial markets. I mean, this day, Amazon does not generate cash flow. It burns cash, and it continually burns cash. And the source of its net income is all gap manipulation. For whatever reason, Amazon is a cult stock. People love it. Everything Bezos does is to generate revenues. He doesn't care what the cost of generating that revenue is. In fact, his international e-commerce business, because he segments it between North America and international, the international e-commerce business, which is the internet sales, that had an operating loss of over $600 million last quarter. That's not something you'll hear in the media, but that's a fact. And he's folded Whole Foods into his he calls it product businesses now. It's essentially the internet sales and all the other crappy little businesses he has plus Whole Foods. And despite the fact that Whole Foods was running close to 5% operating margins when Amazon took it over, the operating margin for the product sales business was slightly more than 1%. And it the same quarter last year, it was like 0.3%. So the thing is, you would have thought that by folding a 5% operating margin business into what he had, he should have gotten higher operating margins. So it told me that he's, driving down prices at Whole Foods, again, to try and generate revenue growth, because the stock is fueled by revenue growth. And no one bothers looking beyond the top line. But if you go and dig through the accounting, you'll see it's a viper's nest of accounting manipulation. Tesla's the same thing. I mean, I think Tesla's gonna drop dead within 2 years. In fact, I've got my short seller journal subscribers. I've given them ideas for how to position for the stock going to zero within 2 years. I mean, this thing is just, I mean, Elon Musk may as well just shovel cash into a furnace, because he's burning hundreds of millions of dollars every single quarter. He misses his forecasts every time he comes out and makes a forecast. And I've read all kinds of horror stories about the quality of the Model 3 and even the quality of his older legacy models. The tax credit's is probably going to expire this year that Tesla car buyers get, and it's going to put the pricing of Tesla on more equal footing with all the competitive models that are starting to roll out. Porsche, Audi, Jaguar, BMW. They're rolling out, mass production models. They're going to be able to ramp up production much faster than Tesla has been able to. And it's going to put Tesla out of business. So, how the stock manages to stay at the level where it is, I have no idea, other than there's probably close to 40% of the float is short, and it's probably in a perpetual short squeeze right now.
Well, thanks for that, David. I just wanted to hear your thoughts, because I knew you'd been following it closely.
It's just aggravating to watch it, because like I said in the blog post, those two companies thoroughly reflect the deep fraud in our financial system. I mean, they're the poster childs for it.
Yeah.